what we're famous for is buy now, pay later, which is a little bit of both a blessing and a curse, because that's what most people associate with us. But the truth is, in Europe, we're like PayPal, we're a wallet, people use us. 20% of our transactions are people are paying the full amount. So customers are using us to buy everything, and we think about ourselves as a third-party network, like American Express or PayPal, that competes with Visa and MasterCard. We have over 500,000 merchants live. We're growing that base very, very fast. And consumers use us for all type of purchases, whether it's on DoorDash or Uber or Macy's or Sephora. And the big difference is, historically, you used a credit card. Credit cards were trying to make you rack up debt, $4,000 or $5,000, 30, 40% interest rate. We're doing 0% short-term installments, fixed time, and we encourage people to use debit and occasionally use us for a single purchase of $100. So people just borrow on average $100 from us compared to credit cards of $4,000.
You obviously are very successful at that middle way, if one wants to call it. Very Swedish in a way, isn't it? The middle way. But I do wonder, so you're making your money on the transaction costs and from the retailer and from the retailer, and that's, in a sense, the retailer is bearing the cost of the 0% on the short-term payments.
That's true, but you have to remember, we're from Europe, where interchange is regulated. Credit card fees in Europe are 0.4%, 40 basis points. Debit is 0.2. In the US, credit cards cost merchants 200 basis points, 2%, and debit cards cost 100 basis points. And in addition to that, credit card companies make another 2.5% by borrowing people and making them revolve on the credit cards. A $100 transaction in the US, banks make 5.5% on. I mean, that's insane. So for us, coming from a European perspective, we're like, whoa, there's a lot of margin here. There's a lot of opportunity. We can offer these services for merchants at very attractive rates, and we can offer consumers 0% interest. And we know we make that business work. Our losses are lower than credit cards, 30% by industry standards. So to us, we're just looking at this to say, hey, this is a market that hasn't been disrupted. Banks have been making too much money. There's tremendous opportunity here to bring, more value for less money.
Firstly, so when you come into this, or when you expand, do you move towards the US credit cards and debit cards, their rates, or do you stick to your European frugality and hope that more people come to you because of that?
Look, one of my biggest privileges was I went to Bentonville, Arkansas, and I had the opportunity, as we were launching our partnership with Walmart, and I found myself standing at Sam Walton's grave, and it was just such an emotional experience for me, who coming from a small city in Sweden, and now get the chance to work with the greatest retailer in the world. And I feel there's so much commonality in the culture in the Midwest with Sweden. And one of the things that I really appreciate about Walmart, that I think made them such a successful company, was when they got their profit up, when they started making more money, they piled that back into lower prices and higher quality. You are willing to do that over decades, you're going to move and make a big difference. And I don't know, Richard, last time you heard about a bank who were like, oh, we did quarterly profit of the records, and now we're lowering our interest rate and bringing lower prices to our customer. It just hasn't been happening in this industry. And if we're willing and committed to do that long term, we build a trust with our audience that's just fantastic, and a preference that's going to make them prefer our products over the alternatives. And that's what we've seen. 26 million Americans see that value.